All right, everyone. Here we are with ticker symbol SRNE, Sorrento Therapeutics Inc. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative. And to all my subscribers, welcome back. So Sorrento has actually had some sideways movement, but when we look at it a little bit zoomed out, it has recovered from the bearish run that had lasted for almost a month and a half. Literally from the beginning of August all the way till mid-September. And I mean, it hit highs of $20 and some change. Very important number to keep in mind. And it hit lows down here at 580, 583, 585 range and recovered from there, hitting these newer highs. And it broke through $11 and it recently reached $12 and some change. And from that point forward, we have been in a slight bearish run. So zoomed in, $12.17 is super important to keep in mind and go ahead and pay close attention to. And from there, it's been dipping, reached lows here of 1014. So in the more zoomed in and focused picture of these last recent days, 1014 is important and 1217 is important. That's our resistance level that the bulls want to cross, 1217, and the bulls want to stay away from this number, and this is what the bears want to cross to try to hit newer lows, and that's 1014. Let's go ahead and look at what's important for tomorrow. So as of right now, it's at 1060, and our support level has slightly moved and our resistance has slightly moved. So let's go ahead and see what we want to know for tomorrow. So our 50-day moving average is 1068. Super important. Lets us know what side of the chart we're in right now. We are in bearish territory, and the bears are going to try to stay down here and bring this down to newer lows. So the tug of war is going to be interesting tomorrow. If the bulls can reappear and break through 1068, this could be on its way back up to bullish territory and newer highs. Now, the bears are going to want to break through 1055. I want to emphasize how important it is to pay close attention to that, because that's the lowest point in the day, and we're already in bearish territory. So if 1055 gets broken through, we are going down further into bearish territory to hitting newer lows and moving further away from the 50-day moving average in a downward direction. So super important to keep that in mind, bear that in mind, and pay close attention to the behavior of this stock if it breaks through 1055. Now, on the other hand, we have what the bulls want. The bulls want to break through 1097. Super important number for them. That is the first resistance level and highest resistance level before this falling here of the bears appearing. If the bulls are able to break through that, that is 1097, turn that into a support and break further away from the 50-day moving average in an upward direction and hit newer highs. Now, the most important thing that will happen is if the bulls accomplish this, they accomplish two things. They broke through the 50-day moving average and got back into bullish territory, and they broke through resistance, pulling further away from the 50-day moving average in an upward direction. So the bulls, by accomplishing that, they've done those two things, and they can go ahead, have momentum, continue a rally, and go further into bullish territory away from the 50-day moving average, hitting newer highs and new resistance levels. But before then, the bulls need to break the 50-day moving average, work their way up, and break through 1097 and turn that into a support to hit new highs and new resistance levels. Now, again, I want to emphasize 1055. If that gets broken through, this could be on its way down to newer lows and further away from the 50-day moving average. So keep in mind that number and pay very close attention to the behavior. How quickly is it moving down? Or are the bulls even trying to pull a tug of war here and bring this one back up? Thank you guys so much for watching. Don't forget to hit the subscribe button if you feel encouraged. Well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before, stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one, but what I want to talk about is what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that doesn't sound like a lot. It sounds like, oh, well, it's 30 cents. Oh, it's $3. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising this up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, On the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.